Okay, something just happened that could fundamentally change everything about your money. The interest on your savings, your mortgage rate, even your 401k. Donald Trump has nominated Kevin Warsh to be the next chairman of the Federal Reserve. And the market's reaction? It was instant, it was huge, and it all started with one of the oldest forms of money on the planet.
The very first clue that something massive was underway came from the gold market. In just the hours after the announcement, the price just fell off a cliff. So the immediate question on everyone's mind was, what is it about this one guy, Kevin Warsh, that could cause such a violent immediate reaction?
Because we're talking about a 5% drop in a single day. You have to understand, for a major asset like gold, that is a historic crash. It's the biggest one-day drop we've seen since the early 1980s.
At the exact same time, the US dollar just surged. It had its best day since July. And this is a classic market move. What traders are betting on is that a Chairman Warsh will mean higher interest rates. And when rates go up, the dollar becomes way more attractive to own. So you saw money just flood out of gold, which, remember, pays you zero interest, and go straight into the dollar.
And silver? Whoa, it got hit even harder. We're talking down a staggering 13%. So this wasn't just a little tremor in the markets. This was a full-blown financial earthquake. So who is the man at the epicenter of all of this?
All right, let's get to know the nominee, because his background is absolutely key to understanding why Wall Street is freaking out right now. So Kevin Warsh is no rookie when he comes to the Fed. At just 35, he became the youngest Fed governor ever appointed. He was literally in the room with Ben Bernanke, helping steer the ship during the 2008 financial meltdown. He eventually resigned, but then he was on Trump's shortlist for the top job back in 2017 before Powell got the nod. So he's been in this orbit for a long time, and during that first tour of duty at the Fed, he earned a very specific nickname.
He became known as an inflation hawk. So what does that mean? It means he was the guy in the room constantly warning about prices getting out of control. He was always pushing for higher interest rates and was a major critic of the Fed's massive money printing programs, what we call quantitative easing, because he was terrified it would lead to runaway inflation.
Now here's where the story gets really interesting. There's a personal connection. Warsh's father-in-law is Ronald Lauder, the billionaire heir to the Estee Lauder cosmetics fortune. And Lauder also happens to be a longtime friend of Donald Trump and a major donor. So this connection has put Warsh in Trump's world for years, long before this nomination ever happened.
And that brings us to the central conflict, the question that has all of Wall Street buzzing right now. Has the famous inflation hawk completely changed his tune to get in line with a president who has been screaming for lower interest rates for years?
Just look at the contradiction here. On one hand, you have the Worsh of the past, the hawk, who voted against stimulus again and again and was constantly warning about inflation. But then you have the Worsh of today, who seems to be perfectly in sync with Trump's calls for lower rates, even calling for a regime change at the very institution he now wants to lead. So the billion-dollar question is, which Kevin Warsh would actually show up to the job?
Well, this apparent flip-flop prompted some incredibly sharp criticism. Senator Elizabeth Warren, she did not mince words at all. She basically questioned his independence, suggesting he's just saying whatever Trump wants to hear. And this question, is he independent or not, is at the absolute heart of this entire debate.
And believe me, this isn't just some abstract political debate. The outcome has massive implications. We're talking about decisions that will directly affect trillions of dollars in the market, starting with the Fed's own enormous portfolio of assets.
Just take a look at this chart. Before the 2008 crisis, the Fed's balance sheet was less than $1 trillion. Pretty simple. But after the crisis and then the COVID pandemic, that number just exploded. It peaked at nearly $9 trillion and sits at $6.6 trillion today. Worsh himself has called this balance sheet bloated and says it needs to be shrunk dramatically.
But here is the massive danger. If he tries to shrink that balance sheet too fast by selling off bonds, it could completely panic the markets. We actually saw a preview of this back in 2013, something they called the taper tantrum. Just the hint that the Fed might slow down its bond buying sent interest rates soaring and stocks crashing. Trying to do that now, with a balance sheet that's way bigger, it could be taper tantrum 2.0 on steroids.
So all this talk about balance sheets and taper tantrums, it sounds super abstract, I get it. But the decisions that a Chairman Warsh would make would have a direct, very real impact on your wallet. We're talking about your savings account, your mortgage, all of it. So think about this. If Warsh goes ahead and cuts rates to make Trump happy, that amazing 4 or 5% interest rate you're getting on your high-yield savings account, yeah, that's going down. Your 401k is probably in for a very bumpy ride as the market tries to figure out if he can cut rates without setting inflation on fire again. And even your job security is on the line, because interest rates directly affect whether companies can afford to borrow money to expand and hire new people.
And check this out. This is a real puzzle for anyone thinking about buying a house. You'd think if the Fed cuts interest rates, your mortgage rate would go down, right? Well, not necessarily. If Worsh cuts the main rate with one hand, but then starts selling off the Fed's massive holdings of mortgage bonds with the other hand to shrink that bloated balance sheet, the two moves could basically cancel each other out. Your mortgage rate could end up staying right where it is, or, get this, it could even go up.
But here's the thing. None of this can happen unless Worsh can get past the final boss, a confirmation hearing and a vote in the U.S. Senate. And let me tell you, that is far from a done deal.
And here is the political twist nobody saw coming. The biggest roadblock for Warsh might not come from the Democrats. It's coming from inside his own party. Republican Senator Tom Tillis from North Carolina has already come out and said he will oppose the nomination. And in a Senate this closely divided, that single vote could be enough to sink the whole thing.
So why is he opposed? Well, his reason gets right back to that core question we've been talking about, independence. Tillis basically said he won't vote for any nominee as long as there's what he called political interference at the Fed. He's making it crystal clear that this fight is going to be about one thing. Will the next Fed chair answer to the economy, or will they answer to the White House?
So that's really the bottom line here. Is the next leader of the most powerful central bank in the world going to be an independent steward focused only on inflation and jobs? Or will the Fed become a political tool used to hit short-term goals? The answer to that question is going to shape the value of your savings, the cost of your loans, and the health of your investments for years to come.